David. Morning, George. Morning, Kevin. Everett, Valerie, Francois. Good morning, everybody. If you want to be a chatter, you want to chat with me on the live stream, all you got to do is be a subscriber. Hit the subscribe button over there, right down there. And a few seconds later, live chat comes on while I'm live. But after I'm no longer live, after this is done, this broadcast, you'll have to leave me a comment or come join me in Discord. Discord is a premium service, so you gotta pay to get in there, but it's like $5 for 3 months, and another $20 for another year, so 15 months for like $20, $25. I mean, it's a pretty good deal, right? I don't feed my kids on nothing, so I do appreciate your support and everything, so thank you. Hey, Alan, morning. Maurizio, good morning. So, don't be a trading zombie. Now is not the time for complacency. We have CPI coming out this week. We have PPI coming out this week. That's Consumer Price Index, Producer Price Index. And we have earnings season kicking off. Some people call it Q3 earnings season. It's the reports for Q2, the results. So that's kind of ramping up with the financials getting started later this week, kind of the Thursday, Friday time frame. So let's go ahead and do the disclaimer. All trading involves a substantial risk of loss. If you don't have money to put at risk, do not play this game. This is not a get out of debt free card. This is not a solve your financial problems with trading. Be freaking careful, all right? Past performance of anything is not necessarily indicative of future results. Like, just because I've gotten stuff right in the past, just because anybody's done something in the past, does not mean it's going to work in the future. This presentation is intended to be informational, educational, and fun. Is not a recommendation to buy or sell anything, financial instrument or otherwise. Like, do not buy. Don't even join Discord. I mean, you don't have to. You can keep coming right back here for free. I do YouTube. I do it to help you. All right, it's not to help me. It's to help you, help more people, get my word out. Share this with somebody. Hit the thumbs up if you like what I have to say today. I mean, I'm just doing this to try to help people. Scouts Honor. I mean, I made a post in YouTube. If you go to the post tab, it's July 9th was my anniversary for getting my Eagle Scout. It's been 27 years. Crazy to think it's been that long ago. I'm doing this, Scouts Honor, to try to help people. And if you desire personal financial advice, you got to hire and consult a financial advisor. And lately, you're just going to get robo-advisor, like an AI helping you, unless you go talk to somebody and they're supposed to give you advice based on your financial situation under U.S. law, other places in the world. I don't know. Yeah, morning, Patrick, Jan, Ted, Dan, Pat. Morning, everybody. Glad to have you. So, moving on. Hitting the calendar. Just a reminder, not much happening today. That's not today's, that's last week's. Not much happening today. Here we are. Not a lot. And tomorrow, though, big news. Before the open, CPI. That's a market mover. Are we going to pop? Are we going to drop? We have been an outsized number of days from the last fair size pullback. Let's say the S&P 500. It often, very often, gets 3+% pullbacks. How often, you say? Well, on average, it occurs every 47 days. All right, every 47 days. Right now, we're sitting at close to 90 since we've had a 3% or more pullback in the S&P 500. You might be like, oh, well, where are you getting your numbers? This is since World War II, all right? All the market days since World War II, we typically go about 47 days before getting a 3% pullback. Now, 3%, that's not overly huge. We'll talk about what number that is. But be careful, all right? Now is not the time to be complacent. This is coming out tomorrow morning, hitting before the open, 8:30. Now, the day after that, Thursday, PPI, another potential market mover, along with unemployment claims, right there, 8:30 before the open on Thursday. Then rolling on down to Friday, we have consumer sentiment hitting while the market is open, and we have the G20 meetings kicking off Friday, Saturday. Who knows what they're going to do, all right? We also have some Fed members speaking and all sorts of other things happening all week. Please be careful. Now is not the time to get complacent, all right? Hey, RP Zimmerman, don't believe I recognize your name, but welcome. And Craig, morning. So, glad to have everyone. All right. Those are the warnings. Please don't get the FOMO, all right? This is not the time to be all in on the market. I know crypto is, the last few days been super hot. We're going to talk about some of the stocks in crypto because they made the list this morning, all right? Rolling on into the list, let's talk about the ES, like 30 minutes yesterday. I kind of gave you that, I thought we might see a rollover unless we can break on up. Look where we are. Look what we did overnight. We are pushing back above that consolidation. It didn't happen yesterday. It is happening this morning. And kind of did that early at 2 a.m. Eastern time, and then now we're rolling on up there this morning before the open. That's kind of bullish, actually. All right. Now, I don't have my roadmap line turned on, so let's turn that on. We are above the roadmap line. We haven't really, we couldn't hold it on Friday. If we can hold it today, break above this high, that is actually quite bullish here. Now, when we did this move on Friday, I said that it seems we're kind of likely to make a higher high now. And I still kind of maintain that. Now, this was a bearish continuation pattern, but now we're breaking it. We're breaking it. I mean, that could have wrapped it up right there. That could have been the end. So this is one of those things you got to be very careful right now, all right? CPI tomorrow can change this whole thing, and we can go on down the drain. All right, on down the toilet. Now, why ES? What am I doing? That's futures for the S&P 500. If it's not clear on the screen right there, S&P 500 futures. You may be like, I don't know what that means. Well, futures trade almost 24/7. 24/5. They're closed from Friday night till Sunday night, and they reopen on Sunday night, and they give me a more complete picture of what's going on. Like if you look at the S&P 500, the actual SPX chart, the cash index, it stopped at the market close yesterday. And there's no data until, we open in 9 minutes. So it leaves these gaps. When you look at the ES, there's no gaps. It closes for about an hour for accounting sake from 5 to 6 p.m. Eastern. Then it reopens and goes. And it provides a more complete picture of where we're headed. So right now, these two charts are a little bit at odds. All right, S&P 500 holding a bullish above the roadmap line, while ES was kind of blurring it up, spent more time below it on the 30-minute here. Like I said, if this breaks out though, bullish, probably going higher high than what we saw right back here on Friday, June 30th. All right. Morning, Michael. Morning, Craig. Morning, everybody. All right. I catch the chat moving out of the corner of my eyes. I glance over. All right. NQ. This is big tech. This is QQQ. ES, you can trade it with SPY, SPX, all the S&P 500 derivatives. NQ, you can trade it with QQQ, TQQQ, SQQ. Be careful on leverage instruments, but you can trade it with all the QQQ stuff. This one has not made a higher high. All right, let's zoom back out. Look at the daily. Zoom this back up a little bit so we can actually see what the heck JT is talking about. Look right here. We made the high on Friday, June 16th. This was a lower high on July 5th. This is a bearish pattern. Be careful. We might see rotation out of tech. Tech may drop while other things are not dropping. All right. Now you may be like, I don't see how the market can go higher if Apple and Microsoft and the eight stocks that make up most 50% of the S&P 500. I don't see how the S&P 500 could possibly go higher if those 5 stocks are dropping. Well, guess what? It's called rotation. That money can flow out of big tech and into other things, and we can just inch higher on the S&P 500 while tech gets a correction. Russell here, small caps, this is extremely bullish right now. A higher low, about to break out higher. Continuation goes up to 1955 and 1991, and probably sets us up to go up to this 2100 to 2200 area right up here. All right, these are small caps, IWM, stuff like that. All right. Be careful. All right. Oil. Potentially trying to break out here. Getting a little bit of green here. If we can break above the roadmap line. Beautiful. All right. Now, if you're in the chat, you're watching this, you're like, hey, I got some requests. I want you to check out my chart. Come back tonight, 5 p.m. Eastern. 5 p.m. Eastern. I'll be live for, I call it 30 minutes of awesome. It used to be 30 minutes. Lately, it's been an hour, hour and 10, hour and 15 minutes. I will take your requests. I'll usually stay until I get them all. I'll try to do everybody's. If you come join me, I'll give your chart some attention and give you my kind of prediction. All right. So if you got some stuff you want me to look at, come back, 5 p.m. Oil, right there. I mean, still lower than right here. We need to see it break above this zone. Right there, it's finding resistance. Finding resistance. If we can blast on through, blast through the roadmap line, target right up here, 80, possibly 83 on this move before we get another pullback. And if we look at the wedge here that it kind of made, the range from right there on May 1st down here to May 4th, that was 3 days. I mean, 3 days, 4 days, however you want to look at it. 4 candles. All right, 4-day drop. If we expand that range right here on the pop out of this little descending wedge thing, however you want to, whatever you want to call it, bull flag, bear flag, diving board with a twist, whatever you want to call it, that target pops up right up here around 85 if we kind of expand, do that range. And as you saw, it can happen in like 4 days. So be careful. We could see a pop in oil. All right, this could be a fake out though, and we could drop all the way down here to 55. Be careful. All right. Remember, these things can move fast when they want to. Gold here, still looking for the break above 1950 to build my position. Can it get continuation lower? Well, sure as blink it can. I mean, so be careful. Hey, Sick Bear, morning. Bitcoin still consolidating. We had a nice rally yesterday and then slam right back down. Slam. I don't know. Frustrating watching this thing consolidate. I do think it's a bullish setup. I do think we're going bullish into the halving and probably into 2025. And then we'll go through another crypto winter into 2026. It's just, that's the pattern. Short term, we're just consolidating right here. Bitcoin tends to do consolidations, and it can do so for a while before it gets sparky and moves. We do have BlackRock and others trying to get their spot ETFs. When they do that, that's going to lock up a lot of Bitcoin. They're going to absorb a lot of supply, and it's going to push prices higher more than likely. And this all corresponds with the halving event, which reduces supply and all the excitement that comes around it. So there are lots of fundamental narratives that are going to support prices going higher. So there you go. Ethereum, though, not as bullish, not making higher highs, just consolidating down here in the middle zone, way off the high, relatively way off the high. And it's kind of bearish and could go down to the $1,500 area. Dollar here continuing to drop, probably going to extend down to 100, if not on down to the mid 90s, where I've been predicting for months. So, WDF, let's talk about some stuff that's actually moving today. Got coming off of earnings yesterday, popping pre-market. Look at this, looks like a breakout, beautiful chart. What might be some targets? We do have resistance at that prior high, which seems to be where it's sitting pre-market, right in there. You can see right there pre-market, the pre-208, and extension off of this move right there puts it 209.80. So right to that first extension, make it a little retrace back to this prior high before we can push higher to 217. Potential breakout and potential bullish setup for WD-40. CRM still looks like it wants to push back down, but yeah, that's extension right up there is the resistance. We do have a giant resistance box that CRM's got to work through Salesforce. Remember, they abandoned a tower in San Francisco to try to save money. So they are very focused on trying to save money. They know money's expensive, and they could turn this baby around and break out and push higher. Does have significant resistance to do that, though. Here looks like a biotech. You know what I say about biotechs? Be careful. They don't always follow my pattern. Biotechs are not reliable. SMCI. We breaking higher. 284 on the upside there. 303 above that. I do expect it to roll over and come back to the roadmap line at some point in time. That time is not now with the break higher, and the market is open now. Z for Zillow. Zoom this out just a little bit and look at the bigger picture. We came up to the target, retraced back to back into the breakout consolidation. Now pushing higher. The next move I would expect would be right up here to 56. Find some resistance and pull back again. ZG, Zillow Group. That's interesting. It's got two tickers, I guess. Same situation. ETSY, beautiful potential reversal here. Come back up to the roadmap line would be my primary expectation. This is not a hot looking chart. That's barely a higher low, and that looks pretty rough. I mean, that was a really deep correction, and this thing can go down in a blaze of glory. So be careful. This was a deep correction, barely holding on to the prior low. Extension down could be in the cards for Etsy. Could hold on to it here. I'm not convinced we're going higher until we're back above this roadmap line. Now we could come up here and test it. That'll be the real tell. Are we going to turn down again, or are we going to break out and go retest the highs? 3M, MMM. Just, man, that looks pretty bad. Sitting down at the lows. There's no, that's a little baby potential measured bounce setup, but that looks pretty stinking bad right now. I would be very careful. Way below the roadmap line, can extend lower very easily. PWM, this one just keeps showing up. Ridiculous chart. There's nothing here for me to talk about, really. JPM, probably coming up to the first extension at 150. 150 is the target. 157 above that. Boyle, continuing to get some volatility and just consolidating is in natural gas, NG1, exclamation point. Here's the futures. We have been, I mean, that's not a that's not a bullish chart. It's not really a bearish chart at this point. It's just kind of a sideways chart. I expect it to continue in this range for the foreseeable future. If we can break out above the roadmap line, I'll change my opinion. Right now, that's just a sideways continuation. No opportunities. TSM, not for me. Not the way I trade. TSM sure does look like it wants to come back to the roadmap line. We got right out to the 1618 and met some resistance. We could go on out to the 120 area, but coming back to the roadmap line looks highly likely. Highly likely. See a Kava? No idea. Restaurant group. That looks like a nasty pattern. More sideways. And not enough data to really predict any kind of long-term anything. Marvel. Nice pop and consolidation. May retrace the gap. Be careful. That's a lower high. So far, lower high may lead to a retrace back down here before it can break out. Affirm. Stuck at the roadmap line. I wouldn't chase that one. EWY, Korea, ETF. Looks like it's on a kind of a slow churn higher. Like we get these little peaks and a dip and a peak and a dip and a peak and a dip and a... Let's just do it this way for a minute. Moving the chart instead of the line. Yeah. Could go a little deeper, but it may hold right where it is and go higher. It's kind of a thinly traded. Yeah, only about 43K. Average volume 3 million. Yeah. I don't know, it's got a lot of gaps in there. I would be careful chasing that, but 68 looks like on the upside. 68, 70. Could get some downside down to 60. SDIG. Yeah. They were talking about this in Discord quite a bit. And, you know, we do have these prior highs. If we can get above that, positive. Otherwise, we could turn down at that roadmap line and go lower because that's right off the lowest low. Be careful. They, you know, lose money, lose a lot of money. Did a reverse split. That's not bullish. That's bearish. And it did go lower low after it did that. I'd be careful. This is obviously a company that has trouble maintaining their stock price. LI. That's a heck of a move, but we do have resistance right up here. Moving 3% today. Oh, coin. What's coin doing? Come on, baby. If coin can break these prior highs, back right up. I'm going to set another alert right here. Coin gets above that. Probably going to 115. This high from right here. We break above that. Beautiful, bigger targets right up here. 160 to 220. It's a nice big fat range because it's made a big, nice big fat move. This is a measured bounce setup. Takes it right up in that zone. I know you can't tell, but because of all the fibs, right there, 168, possibly 239 even. Like that's the targets right there. Those fibs. Come on, breakout. I am long that one with a 60 long call, 60 short put, 40 long put. That's like a bull. It's called a synthetic stock. It moves like 1-to-1 with stock, and oh yeah, I bought it way back here. So look, it was probably back here when we did this. Looking for this baby to go. Yep. All right. SVXY getting a little pop as we grind off. Yeah. Probably going to go higher high until we get the pullback. SVXY is inverse VIX, so it pops when VIX drops. Yeah, I love seeing the coin action too. And that's just like, I was mesmerized for a second. I was like, it's glorious. MSTR, just climbing the fib ladder. Next resistance up here around 445. Looking at this, the 618 retrace, about 433. So 433, 445. Next resistance up. We start breaking above that, and yeah. I guess I need to run the bigger fib line and see where that comes in. Yeah, way up there still. Way up there. So we got a long ways to go on MSTR. VRDN getting slammed. That one can come back down. Pharmaceutical, biotech, dangerous. Novadisk, same situation. TM, found resistance at that box. The consolidation it did before this big drop. Can it break out? That's a good question. Looks like it's on the way back down, potentially to retest these prior highs. We zoom on up. Come back down here. We could not go up and retest. We're rolling down, so now expectation right back down where we gapped up from. Hey, good morning, Chris. IOVA. Potential breakout. That's a biotech. Be careful. Biotechs are dangerous. They don't follow my patterns. Oop, that was cool. Whatever that was. TradingView helped me out for a second. So watch that prior high. Could go up to $9, $10. Not a big mover. NTR. That looks like garbage going down in a blaze of glory. Yeah, be careful on that chart. That can go on down. And AA, that's another Alcoa earnings coming up. Estimated to lose money. Been losing money. I don't know. That doesn't look so hot for, I mean, couldn't break higher. Haven't been able to break higher. That's a garbage chart right there. Looking like we can go lower. Support probably down here around 20. You can just keep on this path right down here. Doesn't have turnaround. That looks pretty bad for Alcoa. Be careful. Bias for the day. Potential gonna break out here. Potential. Let's go back to the 30-minute and zoom it up. Tons of stuff on the chart. If we can hold onto this and not just break down back down below this consolidation. So the consolidation I drew in here yesterday. If we break back below that, that's bearish. If we can hold over it, that's bullish for the day. Certainly, if we break out over this high, we're highly likely, it's something like 90% likely to go make a higher high than what we made right back here on June 30th. All right. We can talk about NVIDIA in Discord, or I'll talk about it later today. So it's same chart pattern I've talked about for ad nauseum. It's cooked. I mean, the move is cooked. That's way extension. NVIDIA's at 39 times price to sales and ridiculous up here. Highly likely to get a retrace. I did mention I would talk about that 3% correction on S&P and what kind of number that would be. We're likely to go make a higher high at this point, but a 3% pullback would take us back down to about 43.30. So be careful. That CPI tomorrow could turn the tides. All right. You need to be careful. Know where your money is. Cash is a position. You can be sitting on the sidelines waiting. It's better to wait for a dip than to ride through the dip. All right. Don't FOMO, buy long, and then have to sit through that 3% pullback. And it could be 5%. It could be 6%. It could be 15%. Be careful. All right. I'll be live at 5 p.m. to cover your requests. I'll take your requests for at least 30 minutes and probably an hour, the way it's been rolling. So come back, check us out. If you want to chat with me all day, Discord is where it's at. It does cost some money to get in Discord because it's a premium service, and I give you more hands-on chatting all day long. Thanks for coming. I'll see you again later. Bye for now. Make sure you subscribe, hit the alert, hit the thumbs up if I said anything that was any somewhat beneficial